No, I'm not sure. Probably not. Good morning, everyone. All right, we're going to get going here. Okay, overnight action in the S&P once again saw a positive gain in the market. I think, if I'm not mistaken, we closed 2 points from an all-time closing high in the S&P 500, which is about 1565. I think intraday is about 10 points higher than that. So an absolute all-time high is about 1576. But nevertheless, really strong day. Another 83 points in the Dow. We crossed above 14,500 in the Dow. I mean, we've 10 consecutive days up on the Dow. We're really, looking very strong. Global markets really rallied in Asia on the back of that. So I think right now we're driving more on the back of economic data rather than companies' earnings and guidance, because you can see from the jobless claims yesterday as well, another nice beat. The data in the U.S. continues to come out and surprise to the upside. So I think so long as that's happening, this trend can stay intact. Asian shares traded very nicely yesterday, pretty much across the board. We had some big gainers out of the indexes there. We saw the Japanese, the BOJ put in the expected central bankers. We saw there was a couple other things happening in Asia that really drove markets, but nothing out of the ordinary. We've just seen essentially positive sentiment across the board. I think underlying commodity prices in Australia also made a nice bounce yesterday afternoon. You can see from copper to oil to gold to platinum, everything traded reasonably well. So I think across the board, markets are still looking very risk on. We saw the euro pop its head back above 130, which is also probably bullish for the recovery. On the back of that, and talking about the euro popping above 130 against the dollar, I'm going to show a couple charts here. First one I'll show is actually this is the S&P 500 versus the U.S. dollar, and we'd continued to be in a place where that's an inverted dollar chart. So we'd been in a market now for as long as I can remember. Really, I mean, you can see this chart goes back to the beginning of 2009, where when the dollar weakened, the market went up. And the dollar weakened, the market went up, and that was risk on. That's how it worked. Well, you can see here since basically the beginning of the year, we've just totally had a divergence here, and this I think goes hand in hand with some of the things we've been talking about over the last week maybe or two, where we've talked about I think we've seen a seed change in terms of good data. Actually has been good for commodity prices and good for the market. And good data has become good data again, and bad data has become bad data again. I think the markets is starting to like what they're seeing out of the U.S. I think that the Fed is going to come off the table. The market's still rallying in the face of that. Commodities are still holding up in the face of that, and that's why we're starting to see the divergence of this trade, because essentially this is going to mark the end. I think this chart here will kind of mark the end to when the market started betting that the Fed is going to come off the table pretty soon, and this correlation has been betting that the Fed was going to be there the whole time. So that's really important. The other one I'm going to show here is the S&P 500 Brent crude oil price as well, which is also diverging. And this is the other thing this is my big call for the next year and a half, and I think it's one of the reasons why equity markets are rallying so nicely here. And I think it's really underplayed and undersold in the markets, and I think that's the oil price is getting ready. Over the next year and a half is really gonna pull back nicely, even in the face of better commodity prices, better equity markets, growing economies, etc. Because the oil supply in the U.S. is absolutely rocketing with all the new fracking technologies, discoveries in North Dakota. I think it's a very real possibility that within 2 years the U.S. is totally energy independent, and so what that's going to do, the oil prices probably have it. So I think it's really important that we watch this, and I think this is actually an underlying story of the market that no one's paying attention to, something that we need to be watching out for. Because as the oil price falls, what that does to the bottom line of every company is actually spectacular, besides maybe Cecil and other oil companies. All right, so today, corporate action. We've only got one stock out with earnings earlier at AAG's that came out the top end of its guidance at 1 rand 4 cents. The expectation prior to their guidance was at a rand, so then they came out in 99 cents to 106, came out at the top end of that. I think it's pretty good. NAV was up 4.5% to 33.91, and their 2-year order book's down a little bit, but nevertheless, I think it's reasonable compared to expectations for Avenge there. And then a lot of stocks going ex-div today. Don't forget this, because I think that people are focused on a lot of different things this morning. There's something we really need to pay attention to on the open. There's a big divvy out of Anglos this morning. We've got Discovery, SUIs, GNDs, GRTs, S&Ts, and MSM. So focus on the bigger ones. There may be an opportunity there at the open, but don't get too caught up in trying to play mispricings this morning. We got big reweightings today. That's what we need to focus on that today. Or not focus on that, but we need to realize that that's there. And I think we don't necessarily want to just play the direction that we know the reweightings are. We actually want to kind of sit tight and just wait for the action, because there could be some real seriously trending stocks today, and that's what I would try to focus on today. Okay, on the data we've out today, we've got CPI out of Europe. We've got a slew of data out of the U.S. We've got Empire Manufacturing, CPI numbers there, net long-term flows, industrial production, and University of Michigan confidence. So a lot of data out of the states, but nothing too significant. All right, we're going to jump into the maps here. First thing I'm going to look. Oh, I got a one-day chart up here. Flip it. Okay, first thing I want to look at is S&P. While we're at it, we'll just go ahead and just have a quick jump here, and we'll go back. Let's actually just go back 10 years here, and you can see here how close we are to taking out highs. It's hard to see where we finished yesterday, but we finished right there. Bottom line is we're 2 points off of an all-time closing high, and we are within 10 points of an all-time high. So I think S&P, in my mind, I think we'll get it there today. Just a random guess. Just something that we need to kind of realize. It's a fait accompli that we get there. Unless a plane hits a building, we are going to test new highs there. Germany's in the same situation here. I mean, all-time highs in Germany are stone's throw away here. We basically are, if I'm not mistaken, we're about less than 100 points, around 100 points away on the DAX as well, slightly over 1% away. I think it's also, in the cards already that we're going to get there on the German DAX, and we just need to be cognizant of exactly where we are in markets, how bullish things are. And we start to make new highs on the S&P. We start to make new highs on things like the German DAX. It's in my mind, it's very unlikely that we just get over it by, 0.25% or something like that. If we just test the level and fail, that's one thing. But if we get a little bit through new highs, most likely we're going to probably continue a little bit higher. So this thing could continue to be stretched and could have some legs. Let me just jump in here to a 30-day. I'm going to show you Fashini on a 30-day. Oh, I didn't update the chart. There we go. Yesterday, massive reversal in Fashini. You can see here, I'll actually show you the one-day chart there. We sold off hard in the morning, down to around 100 Rand 50, and then we made a total reversal there. It's not a key reversal, but it is a huge reversal nonetheless. We opened up, we traded down to new lows in terms of the last year or the last 10 months or something along those lines, and then we reversed it and closed higher than we opened the day. So very, very important. What was most important is the volumes that came in yesterday. We did about 6.5 million. You can see some of the volume spikes that are down here, but yesterday just monster volume out of Foschini. I'd like you to see is how big the volume is here on a relative scale as compared to what it's been throughout the month. So the volume, the fact that we got that reversal, we got it on such enormous volume. To me, I actually cut some Foschini out yesterday that I had bought the day before for clients. I'm back on board them as of yesterday as well, as we started to gain our losses back. And I think that this, to me, is my favorite stock. I would put conviction to this call that I think this thing will trade higher over the next week after that big buying came in yesterday on weakness. All right. Let's look at Anglos. I haven't shown this one in a while just because it's just been a dead duck and there hasn't been anything going on there. Really right around 258. You can see we've been getting through there for tiny little periods of time over the past 2 weeks. We've been kind of sub 58. I think you can see here we're starting to make a bit of a build up to the 58 level. The pullbacks have gotten a little bit smaller over the past couple of days, and I think that we're kind of primed to make a breakout there. I know that we're going to pay a divvy today, but bottom line is, if we do get above 58 and can hold there, I think that could be a little bit of a turn to the upside in Anglos. It's really important that this stock actually, on the back of bearish Chinese commentary yesterday, was China's obviously the market leader in terms of commodities that we're focused on. And on bearish commentary out of the central bank yesterday, this thing was down 1.5% on the day yesterday, and we can look at the intraday chart. Was down 1.5% yesterday in London, managed to regain positive ground. Sorry, I'll just look at the London chart. And you can see there we managed to get back into the green after really just cratering early in the morning. So I think very important that we managed to regain a little bit of green on bearish data. To me, all the negatives have got to be in the cards on these things, and I think that there's going to be a time and a place to own them. All right, Vodacom I wanted to show here. We obviously broke back down the 116 level. We talked about it 2 days ago, the morning that it did break down here below 116. It was a great sell once it got below 116. It's just been a straight line shot below it. We broke lows to new lows all the way going back to November last year. On the close yesterday, which is really significant. The reason why I wanted to show this morning is because we talked about this a while back, and a couple of days ago when we said if it breaks 116, we're looking at about a 112 target. Well, obviously we closed at 1290 yesterday, but I think what's important is the initial target's 112, but we're looking at a very a nice pattern here, a nice head and shoulder formation that kind of gave us a 2-day fake out there, But bottom line is we really had a perfect head and shoulder pattern, and that actually takes us all the way down to $100. So I think that's really important. Now, this thing could have a hell of a lot of meat left on the bone. If we give 112, you're going to want to be on the short side of this thing. You don't want to sit there and try to bottom pick. This pattern is set up to complete all the way down to $100. So watch it really closely. This is also something that I'm going to be on personally. If we do get below 112 and can hold it for 30 minutes plus, I'll be short in Vodacom looking for $100. All right, Sanlam, just having a look at Sanlam here. I know that this is one of the bigger ones in the reweightings. I think it's a 47.30. Neil Broad, pay attention. Big Swinging Brody is kind of the market maker for this stock. And at 47.30 is really where support is. I'm just throwing that out because I noticed this pattern. This pattern, we showed it yesterday. We talked about it. We went through Naspers. We went through breweries. We went through all these stocks, and you get in that exact same pattern. We're a little bit further along, so we're another month out in those stocks. But that pattern has been really prevalent over the last little while, and it's a very typical bull market pattern that we're going to want to play on the long side. So if we hold 47.30 on Sanlam, I think you can nibble on this thing on the long side. And then the last one I'm going to show is just Trueworths, and I just wanted to show this again. I know that there's supposed to be big buying today for the reweightings, but the reason why I want to show it is once again is just because I think this could be one where there's a big opportunity as well. I don't know if we end up getting something like similar to what happened in Fashini, but bottom line is that support on literally a 5-year trend line and that support level at 88 match up basically perfectly. And I think that 88 really could be the line in the sand for True Earths. And really what it is, I mean, it's a full year gap fill. When we broke out here, it was a major gap up. We never really filled the gap. Going all the way back to here, it would be a beautiful gap fill. $88, I think it's worth taking on some exposure in True Earths. And that's it for today, guys. Thanks a lot.